Welcome to Flip TV News Update. I am Anyela Omolara. News headlines. Top banks target $3 billion in foreign capital market. Now the news in details. Four of the Tier 1 banks in the country, FBN Holdings, Access Bank Holdings, Guarantee Trust Bank Holdings Company PLC, and United Bank of Africa PLC, have indicated plans to raise over $3.3 billion, approximately 3.46 trillion naira in fresh capital. This came barely 1 month after the Central Bank of Nigeria directed Deposit Money Bank to recapitalize. According to findings on Sunday, the four Tier 1 bank announced plans to raise funds from both the international capital market and the local market. At least two of the financial institutions, FBN Holdings and GTCO, announced their plans to raise fresh capital last week, while Access Holdings said it would raise capital in both Naira and US dollars. FBN Holdings, in a notice of its extraordinary general meeting filed with the Nigerian Exchange Limited, disclosed that it will be seeking shareholders' approval to raise 300 billion naira additional capital. According to the notice, shareholders will consider a vote on the special business that the company be and is thereby authorized to undertake a capital raise of up to 300 billion naira. The financial institution is seeking to raise the funds via public offering, private placement, or right issue in the Nigerian and international capital markets. Similarly, GTCO revealed that it would be seeking shareholders' approval to raise $750 million. In a notice on the capital raising, GTCO said the fund would be raised through the issuance of securities comprising ordinary shares, preference share, convertible or non-convertible notes, bonds, or any other instrument in the Nigerian and international capital market, either as a standalone issues or by the establishment of capital raising programs, whether by ways of public offering, private placement, right issues, or the transaction mode at price, coupon, or interest rates determined through book building or any other acceptable valuation method or combination of method in such tranches, series or proportion within such maturity period and at such date and upon such terms and conditions as may be determined by the board of directors of the company, subject to obtaining requisite approval of the relevant regulatory authorities. Similarly, Access Holding is seeking to launch a capital raising program to raise funds in two currencies, in the Nigerian naira and the US dollars. The United Bank for Africa also revealed plans to raise fresh capital to meet the new regulatory benchmark. In a statement issued late Sunday, the banking group said it is actively exploring a well-defined strategy to boost its capital base and ensure compliance with the regulatory time frame. UBA's Group Managing Director, Chief Executive Officer Oliver Alawuba, in the statement said this strategy may include a combination of options such as rights issue or private placement. The fact remains that they are confident in their ability to meet the CBN's capital adequacy requirements and will keep investors informed. It was gathered that the banking group is looking at raising about $200 million from the international capital market and raising another round of funding from the local market for an amount yet to be specified. The bank is expected to release a statement on this regards this week. As of the time of this report, Tier 2 bank Wema Bank said it has raised 40 billion naira during its right issue and is waiting for regulatory approval. The bank's MD Moruf Hosseini said that it would accelerate its capital management plans and ensure they embark on the journey to raise the required capital as quickly as possible. Sterling Bank Limited recently raised 21 billion naira through Sterling Investment Management (SPV) plc under its 30 billion naira debt issuance program. On Friday, Zenith Bank said it would be asking shareholders for approval to increase its issued share capital from 15 billion naira plus divided into 31 billion naira ordinary share of 0.50 common each at 31 billion naira through the creation of new shares. It has yet to state the value of the additional capital it intends to raise via the creation of fresh shares. However, it was stated that the capital raising program is being proposed to happen on both the Nigerian and international capital markets. According to the issuing house, Afrinvest Capital Limited, the offer opened on March 27, 2024 and closed on Monday, April 8, 2024. The proceeds will be used to purchase 10 years notes issued by Sterling Bank Limited. The CBN had in circular in late March to commercial, merchant and non-interest bank and promoters of new banks announced the review of the capital requirement for the operation of the affected category of bank in the country. Citing both domestic and global shock, the Apex Bank, in a statement signed by its acting director corporate communications CD Ali, said it had become necessary to raise the capital base of the bank. Thus, the CBN directed commercial bank with international authorization to increase their capital base to 500 billion naira and national bank to 200 billion naira, while those with regional authorization are expected to achieve 50 billion naira capital floor. Similarly, non-interest bank with national and regional authorization will need to increase their capital to 20 billion naira and 10 billion naira respectively. According to the CBN circular, only the share capital and share premium items on the shareholder funds portion of the balance sheet will be recognized in this particular round of recapitalization. The Apex Bank circular said for existing banks, the minimum capital specified above shall comprise paid-up capital and share premium only. For the avoidance of doubt, the new capital requirement shall not be based on the shareholders' funds. Additional Tier 1 capital shall not be eligible for the purpose of meeting the new requirement. All banks are required to meet the minimum capital requirement within a period of 24 months, commencing from April 1st, 2024 and terminating on March 31st, 2026. Notwithstanding the capital increase, banks are to ensure strict compliance with the minimum capital adequacy ratio requirement applicable to their license authorization. In line with extant regulations, bank that breaches the CAR requirement shall be required to inject fresh capital to regularize their position. For proposed bank, the CBN said their minimum capital requirement shall be paid-up capital and applicable to all new applications for banking licenses submitted after April 1, 2024. Meanwhile, an analysis states that the fresh capital to be raised by 26 banks include commercial bank, merchant bank, and non-interest bank at about 4 trillion naira in the next 24 months. Although analysis show that 12 financial institutions, including Access Holding, FBN Holding, FCMB Group, Fidelity Bank, Stanbic IBTC, Zenith Bank PLC, United Bank for Africa, Sterling Financial Holding, Guarantee Trust Holding Company PLC, Wema Bank, Polaris Bank, and non-interest bank Jay's Bank have about 4.8 trillion naira in retained earning. They are not allowed to add these to the capital base due to the CBN directive. Meanwhile, the capital raising effort by the financial institution, according to the capital market analyst Ambrose Omorodion, could lead to dilution of shareholding structure and earning of the firm. He He added that they would create more shares to accommodate the new investors. To tackle the situation, Omorodion said that the financial institution would have to improve their performance to be able to deliver value to stakeholders. He said the capital raising is going to dilute the shareholding structure and earning of the bank unless they double their performance in order to justify their price to shareholders. In all, there are opportunities to make money from this process. Investment banker and stockbroker Tajuddin Olayinka echoed the same sentiment, saying he thinks most of them may opt for merger, but the big ones would be able to find their way or even acquire some of the small ones. However, in April 10th report on its website, Fitch Rating also stated that small banks might struggle to meet the new threshold. Some small and medium-sized banks may struggle to raise the necessary capital, leading to increased M&A. This would result in a more concentrated banking sector with higher barriers to entry, greater economies of scale, and stronger long-term profitability, Fitch Rating said. Fitch Rating maintained that some small and medium-sized banks may struggle to raise the necessary capital and could be acquired by larger banks. Certain domestic systematically important banks have particularly high capital ratio but are significantly below the new paid in the capital requirement and may prefer to consider acquisition over seeking fresh capital injection. CBN had given banks 3 ways to meet the new threshold. They include injection of fresh equity capital through private placement, right issues, or effect for subscription, merger and acquisition, or upgrade or downgrade of license authorization. Stay with us for more news updates. I am Anyela Omolara.